All right. In this video, I felt really compelled to explain the Real Broker share purchase plan opportunity. I've been in hundreds of conversations with agents that have joined us at the firm, and then I continue to be in conversations to further explain the power that comes from selling lots of real estate, which is the goal for all of us, and then how by opting in to Real Brokers incredibly lucrative share purchase plan, how this compounds for you, how the math works. And I find I'm answering the same question over and over again. I felt, why not put this out to the world to help everybody in their conversations or just to better further understand it? So I titled this The Power of Real Brokers Share Purchase Plan Opportunity. And let's dig into this. This is just one of the perks that we get, and it was one of the main reasons I took my brokerage of 73 agents over to Real Broker 2 years ago. For those of you that are building up your real estate careers and starting to learn how to sell more houses and make that 6 figures of income and onward, the share purchase plan is such an incredible way to just opt into it, to do what you're already doing, which is serving clients, selling houses, making income, and then just automatically with this force savings opportunity with free matching rewards to just build wealth paycheck by paycheck without thinking about it. And that's the key. When we have to think about it or action something as agents who have a lot to work out in our business, we are entrepreneurs and we wear multiple hats. And because of that, I know this from experience that many agents are not that great with their personal finances. And it's the power of the share purchase plan that truly unlocks this for you, just currently in the current year you're in, but also compounding this throughout your career. So on the screen here, I'm going to walk you through a few things. So the share purchase plan we have at Real Broker is broken down into 2 phases. The first phase is the pre-cap opportunity. So this, for us, we cap out at $12,000 at Real. If you're at Real, you already know this. If you're just listening to say, I'm considering this, we cap out when we've paid a full $12,000 into the company. By doing that, because we have an 85-15 split, it's when we made a total of $80,000 in that year. When you hit that number, you've capped out on your split and you've played Real this. So the first phase of the share purchase plan is in this 0 to 80 grand. So what Real Broker does, if you opt into it, will take 5% of your net check of the 85% remaining. Okay, so say it's a $10,000 paycheck that you got. Okay, $10,000 paycheck. What would happen is Real Broker, if you still haven't capped, they'll earn their $1,500. Us, right? We will now take home $8,500. So the share purchase plan says Real Broker will take 5% of this figure. Okay, I don't even know the math on this, but somewhere around $425. And they will purchase Real Broker, which is REAX on the stock exchange, on the NASDAQ. And they will go ahead and purchase with your own money 5% of that net paycheck and purchase shares on the open market. And then they'll show up both in our dashboard that we have on our mobile app, our technology, as well in your Morgan Stanley shares account. So you will start to accumulate savings. As you get paid, it automatically does this. Okay, it's buying at the current share price, and you just start to invest. Now, by doing this, by saving your own money, by selling houses as we go, the company will then say, well, we're going to match 15%. So if for instance, that 5% allowed you to buy $100 in stock, this free matching reward from the company is a full 15% free. So you will get given $15 in stock. So by saving your own money and selling houses as you go, the company says, well, I'll just give you some free stuff. So you get a 15% return on your savings. That's amazing. So you can just see how this starts to bank up. So now you have put $100 in, but the company's actually added. So you've got a full $115 sitting there, in this case, starting to build. And that's at current share value. Okay, so that happens for every paycheck from zero up to $80,000. So then the next phase of this, let me just flip over to another page, that is the post cap. So once we've capped out, right, I'll call it post cap, for every dollar above 80,000, the share plan gets more lucrative. See, at this point, you no longer have that 85-15 split anymore, right? You've paid out, you've capped out. We're only paying the deal fee. That's for those not listening. The deal fee at Real is just $275, right? So that comes off your paycheck. We're used to having that 15% come off of our paychecks, and we're used to that 5% being force saved. So my suggestion is you can opt out of the share purchase plan at any time throughout your year. Then you can re-opt back in upon your anniversary. See, I just say keep this thing running. Keep this thing running because your household has already adjusted your finances at home, I'm assuming, to take advantage of this forced saving plan to build wealth for the future. So now at this point, Real lets us save more of our own money. They let us, paycheck by paycheck, save more for our future. This is a massive upgrade. It goes to 10%. So if my paycheck was $10,000 again, we're allowed, and they will automatically save $1,000 away for you. They will buy that REX stock for you. But now it's not just the 15% free, it's actually 30%. So now this free reward that we get by just opting in is a full 30% return on your savings, just gifted to you. So now Real would be adding $300 to your $1,000, making it a $1,300 piece of savings on that $10,000 paycheck. It's a lot of money. You can see how this starts to add up over time and over time. Now this continues to go and continues to go at the point when this total amount of freebies post cap, when this number gets up to $4,500 free, this is free from the company, that becomes the kind of free reward cap. At this point in time, just so you know, you would have saved an extra $15,000 of your own money automatically and invested it. And at this point, the company would have added the $4,500. So now you would have $19,500 in your forced savings into the company that you're a part of, plus what we had talked about before in the pre-cap environment. This is a lot of money. So at this point, this specific scenario, the agent would have maxed out the share purchase plan freebies by the time they've made a full $230,000 of gross commission income. All right. At that point, I mean, there's a lot of agents in our company that continue to earn more than that. And if that's the case, the company doesn't match anything further, but they continue to let you save and save and save. So again, for the high income earners out there, you want that automatic savings because there's a very good chance if you're earning that kind of income, your household cost structure is nowhere near that income level. So it makes sense for you to take some money and invest it. And why not do it automatically with the company you're a part of? So this is how the share purchase plan year by year starts to compound. So let me give you a little example here. Right now, I think the share price is about $1.80 US dollars. Right, as you're selling and as this share price is finding its footing, as we're building the company, it continues to purchase stock at this price. And then if the stock moves a little bit and we go to 190, you'll buy stock then, but you'll be seeing a lift. And over time, as our career develops and as our company goes from 12,000 agents to 15,000 to 20,000 to 40 to 50 to 100, the share price will continue to grow. It'll grow because of profit line and because of how lean of an infrastructure our incredible executives have built, driving future share growth. Now, for all of us, as we're saving our money, being gifted this free stuff, and as things progress over the next half decade, 2 decades, for many of us still selling houses, this number starts to add up to an incredible figure. Personally, I have some of my agents that didn't fully know all of the math here, but kind of trusted in this model. That 2 years in with our brokerage, they're sending me text there and they're saying, I have $80,000 saved. I have $60,000 saved. If I would have just been where I was, which was at our brokerage or somewhere else that doesn't allow this, it's like a 99% chance that that agent wouldn't have saved that money. And even if they did save the money and invest it, which is such a small portion of people, there's no free gift that goes along with it. So it's that compounding value that allows for such a great opportunity for you if you're considering, well, why real, right? The share purchase plan alone, I know, will build millionaires. It will build millionaires off the backs of saving the agent's own money from production-focused agents and letting time with these assets in the market build for you 5, 10, 15, 20 years from now. I know if I would have had this when I started my career in 2005, I would already be in the multiple levels of millionaires just from this one plan alone. Now, if you're interested to learn a little bit more, if you want to understand some of the other benefits that compound and how this could help your business and even run the math on your exact scenario, because every one of you listening is making a different level of money. Every one of you has a different cost structure in your business. And again, the ability to take advantage of this changes for all of us. But I do know, no matter who you are, this makes you a millionaire. And I'm going to say 5 to 10 years, a given.